let's talk a bit about SAIL. Nigel, they've reported a net loss for the 5th consecutive quarter. The stock is a bit subdued in trade. Take us through the other highlights.
Well, Rima, the stock has gained 50% from its February 2016 lows. But just, all our retail investors are there. Watch out for this stock. And if you're planning on buy, just keep a couple of factors in mind. They're making a couple of good steps. One is they're reducing the employee cost. And also the second factor that they're doing is they're divesting some assets. But they have to do a whole lot more, as the numbers are telling you. So let's pull up the numbers for you on the screen. The turnover was up by more than 20%. That's perhaps where the good news ends, because the operating profit came in at around 110 crores. Just imagine that. You're doing margins of close to around 0.5% to around 1%. And the finance cost had jumped up by close to around 30%. So that's not good news. Let's pull up both those two factors, the finance cost for the quarter, and let's pull up the operating profit as well. Now, the finance cost is 5x the operating profit. So whatever you're making, it's not even enough to pay some part of your finance cost. Both that graphic place should come up for you. 100 crores of operating profit, finance cost of around 600 crores. And the positive that I was mentioning is that the employee cost finally has started moving down from around 2,500 crores on a quarterly basis to around 2,100 crores. So that's a positive. But reported a net loss of more than 700 crores. I don't know whether or not retail investors should go out there and buy it. But I'll tell you what, I'll just give you a quick fundamental check on it. In the first half, they did operating profit of around 350 crores, assuming that they do close to around 1,000 crores. So in the first half, you're doing 350 crores. We're saying in the second half, they'll lose 650 crores. Assuming that, they'll do close to around 1,000 crores. Their enterprise value, that's the market cap plus the debt, is at around 50,000 crore rupees. So, on an EV upon EBITDA basis, it's trading at around 50x. I don't know whether or not retail investors should go out there. There are far better options as well, if in case you want to play the Ferris story.